Our guest this week is Han Shen, founding partner of iFly.vc. iFly is an early-stage firm with a non-consensus, high-conviction strategy. Han himself is a very successful investor, but matches that success with equal levels of modesty and empathy. We talked about investing in non-consensus startups in an industry that's very consensus-driven, the vibe shift, investing with conviction, and how Han was turned down by hundreds of investors for his first fund and still lived to tell the tale. Please enjoy. Han, thanks so much for coming on the show.
Joe, thank you for having me. It's a great honor.
Well, it'll be fun. You and I met a couple of years ago at an event here in Austin, and I found your journey as a firm builder and founder pretty inspiring. And I think you have really interesting strategies. So I look forward to having a good nerdy conversation about it.
Yeah, no, totally. I think there's quite a bit serendipity that you and I have different journeys, but both led to Austin, Texas. We moved here just, I think, about a year apart from each other. But I tend to say great minds think alike. So I'm happy to talk to you today.
There you go. So let's start with unsexy stuff. So you like to focus on unsexy parts of the market. What is unsexy in a sexy way to you and iFly right now?
Yeah, that's a great question. Whether you call it unsexy, unglamorous, non-buzzy, but let me actually take a step back. I think, after spending 7 years working in venture capital at other firms, I started iFly in 2016, still back then in the Bay Area. And at some point, I realized the most difficult part and also the most fun part of early stage investing is seeking and seizing the non-obviousness slightly ahead of others. In other words, it's about non-consensus investing. Think this way. If we all love the same company and it's going to be very busy, competitive, assuming you have a relationship with the founder to get in, the price will be also reflected in the round. We probably all have the exposure to these super hot AI ideas these days. It's no surprising that some of them raise the very first round at a valuation, hundreds of millions of dollars, even $1 billion, right? At the end of the day, as an investor, as much as we want to support founders, we also have to keep in mind there is a fiduciary duty of generating outsized return for our LPs. And in that regard, I think the consensus actually is a troublesome aspect of venture investing. And even similarly, when you look at the public market, talk about stocks. If everybody loves NVIDIA, Facebook, Microsoft, and of course Tesla at some point, that price is also reflected, right? So even for public stock investment, you have to really seek that insights ahead of others to build that conviction. So non-consensus investing is really a piece of the thoughts behind the notion of unsexy or unglamorous. But then the question is, how can we identify what makes sense for a firm like iFly? I think that gets to the other interesting aspect of early stage investing, because let's say this way, you and I look at both the same business plan or pitch deck. I'm pretty sure it's very common we can walk away with completely different opinion, because our knowledge map is supposed to be still heterogeneous. Right? We have different training, experience, track record, domain expertise. And it's perfectly fine that you and I have a different view, even on the same pitch book, on the same founder profile. But in order to get to a conviction that fits you or that fits me, in my mind, it's crucial to take time to build a foundational understanding of a market, industry, segment, technology stack, and so on and so forth. So that gets to the practice of investing in the quote unquote unsexy. Is if we don't see anything that gives us a conviction, that's fine. There's no pressure. I told my LPs, I'm not in the business of collecting fancy company logos, period. But on the other side, if we have a conviction about a space or a company, and we are able to reach the right investment terms with the founders, then we are very happy to lead. We will always offer to do that. And we are certainly fine if we have to follow another qualified lead or co-lead. And in some cases, again, because of a conviction, we are also comfortable being the only investor of that particular round. So all these pieces are tied together. So to summarize it, right, we look at different pockets deeply, whether they are buzzy or not. And then we are very patient and paced. And then we build upon our conviction to drive the investment decision making. So that's what's going on behind this notion of unsexy or unglamorous.
Non-consensus makes so much sense to me. It's very intuitive, and yet that's not really how venture works. Like, if you look at the hottest space right now in terms of dollars, it's AI. And there are good reasons why there's a lot of money coming into AI, but just to use valuations as a real measure, Peter Walker Carta put out some data recently. Pre-money valuation average for AI native startups was 19 million at seed. It was 13 million for non-AI companies. So you got this huge gap. I'm just curious, do you feel like how much of a differentiator for you in terms of your overall strategy is the non-consensus piece versus, the other elements of your strategy, which we'll get into, but you have a heavy focus on consumer, for example, you're very concentrated. Like, how much is just the very deliberate non-consensus part?
You talk about several pieces. One is about what's going on with all the AI buzz. Second, you touched on my main focus in the consumer space. And let me share my end goal as the following. First of all, talk about a consumer investment. By that, I'm not referring to just like a CPG only or consumer brand only. By iFly's definition, a consumer is much broader notion. And essentially, in anything that makes American consumers happy, we are excited. When you think about the opportunity statement, it's really about 17, 18 trillion dollars per year spent by American consumers. And consumption per capita is world number one. But that's just all static numbers, right? And the growth overall is probably just GDP percentage, plus minus a little bit. But what's exciting here is the underlying driving force have made different evolution, upgrades, change. And it is the change in consumer trend that is causing or leading to lots of exciting opportunities for both innovation and investment. Let me talk about just a few examples. The generational shift, right? The Gen Z, Gen Alpha, clearly they behave and think differently. How they consume information, how they make purchase decision, what to buy, how to experience. And another bucket we're excited about the consumer trend or the driver is the cross-culture inspired opportunities. Back then in the 80s, 90s, you see the rise of Hispanic and Latinos culture on the mainstream. And the last 10, 15 years, there's a clear rise of Asian cultural elements. K-pop is getting really popular among the youngsters, right? Watching all the Netflix, Squid Game, K-pop singers.
My son is all about Netflix Korean shows. The whole thing. The cooking shows too. He loves them all.
Totally. And I read an article about this Korean American grocery store H Mart. 30% of their customers are not Asian at all. And a lot of them show up to buy stuff because they watched some episode in Squid Game, a particular noodle dish they want to try out, right? So you see this cross-culture inspired opportunities that also reflected among the Gen Z, Gen Alpha, and the mainstream American consumers. And another, example is the migration of population. Net, there have been millions of Americans moving from state to state, and they are shifting where they spend money, right? And the list can go on and on. But what I'm trying to say is all these changes are creating new buckets for innovation. But at the same time, the other side of the equation to us at iFly it's about tech enablement. Right? You don't have to necessarily build a tech tool or SaaS based on AI innovation and sell them as an enterprise SaaS play to big or small businesses. But universally across our investment portfolio, what's common is the founders not only carry the consumer insights, but also are very tech savvy. Right? They don't have to write every single line of codes for their own use, but whenever they can pick and choose the right tools off the shelf from third-party developers, they just pay for it. It's better that way. But often when they do have a burning needs and there's no commercially available tools in the market, they are just so good, and they just crack some codes and make things happen, right? So I see the combination of the consumer insights and the tech enablement drive the consumer innovation. So for us to invest, it's really about anything online, offline, product or service, hardware or software, that gets us excited when we talk about the consumer innovation and consumer investment. And the second piece, going back to the question about AI, and when we promote the concept of consumer innovation, it's not that we are ignorant or stay away from what's going on in the world. We are actually very close to following and watching and even learning from the latest technology trend. Again, that goes back to tech enablement. Let me talk about a few pieces here. When it comes to innovation and value creation, there could be two buckets. One is, like I said, you can just build a tool, whether it's AI-driven, data-driven, whatever-driven, and sell them as an enterprise SaaS playbook, and you can create value that way. The other is, what if you have a full stack play, but absorbed into your business operation? And let's illustrate by looking at restaurant operation. Well, there's no shortage of restaurant SaaS. And at the same time, let's look at a average restaurant, $1 million revenue a year, which is not big, which is not small. And that's also give it like a 15% net margin per year. We're talking about $150,000 net cash per year. Again, not crazy good or not crazy bad. But then the question I want to toss out for people to think about is, how many restaurant SaaS licenses you have to sell to capture $150,000 net per year, right? And again, I'm not trying to suggest which is better or which is worse, but I do believe there are different ways of creating and capturing the value from technology innovation. Back to the example of restaurant operation. By default, the restaurant owner operator will pay a thin slice of their entire value creation to a third-party software provider, which is fine. And then they capture majority of the value they create from the operation by understanding the customers, handling the operation, make it efficient. Even though the scaling of a SaaS versus a restaurant chain is entirely different, but we do believe, and we do have so much evidence that so many incredibly successful restaurant groups have been created to achieve national or international fame. McDonald's, obviously people go there all the time, but another favorite example is Chick-fil-A. It's almost like a weekly ritual that my kids want to go to Chick-fil-A once a week. And 3,000 locations, $20 billion revenue a year. And, give me a SaaS example in the restaurant space to match that kind of economics. Again, I'm not trying to suggest what is better, what is worse. It's just different way of thinking about value creation and value capturing.
On the chicken empire, The Cathy family is wildly successful
Yeah,
philanthropy. They own the business outright. The owner of Raising Cane's, from what I understand, I read recently, was worth something like $7 billion.
yeah,
And I believe he owns the business outright, or he might have a small minority investor. But
true. Yeah,
he's done quite well slinging chicken.
absolutely. And some founders who are trying to sell SaaS license to brick and mortar business come to me with this sentiment that, oh, look at these owner operators. They're old fashioned. They don't understand tech. We are there to help them or even take over them, right? But don't underestimate the power and value of people who both understand both the industry, the market, the customers, and the way to adopt the right technology tools. A few weeks ago, I just read a Wall Street Journal article about Chick-fil-A using drone technology overhead to monitor and track the traffic pattern of all those vehicles waiting in line for the drive-through, right? Obviously, you have to match that throughput with their kitchen operation very well, so people don't end up waiting for 2 hours to get their order, right? So again, I want to remind people, a seemingly non-tech company could actually still utilize lots of tech enablement, either sourcing from the third parties or develop in-house. And I don't think Chick-fil-A will ever sell this drone technology to other restaurant groups. They don't need to, right? They just build in-house for their own use and continue to drive efficiency, continue to build a very strong competitive moat. And last but not least, not to mention, Chick-fil-A's number is not only amazing, but also keep in mind, they don't operate on Sundays. Right? That means by working only 6 days a week, they still outperform so many other fast food restaurant chains. It's just amazing.
I can't tell you how many times in my life I have pulled into a Chick-fil-A parking lot on a Sunday only to realize that I've made a huge mistake. And the
There you
level of
go.
disappointment I feel, it's so terrible.
Same here. Same here.
I want to go back to something you said earlier. It struck me as a very intentional word choice. You said you wanted to be slightly ahead or slightly earlier. You correct me, of other investors. And I'm curious, seems very intentional. Can you talk to why it is the slightly ahead piece?
I'm smiling because you caught that, and I did say that intentionally. If we are just pioneering for the sake of staying ahead of others, it will be very difficult to make it work, because most startups, no matter what, in order to embrace the opportunity and grow at a certain speed, I'm pretty sure my investment is not and should not be the only route. That means we need to win over more and more investment dollars, interest, to join this kind of a cult to go together, right? So that's what I mean, that if we are way too ahead or ahead of others, but nobody still believes in us, then we are not going to get to the next level. But then the next question you might want to ask is, how can we bridge that gap between our investment interest and bring in additional investment or investors for the next round, the round after? That has to do with also the concentration of the portfolio. Now, because we don't have a lot of companies, and in each company we have a meaningful ownership. Aside from the same kind of a value add most investors talk about, making introduction, this and that. One thing I do emphasize and promote is my time availability. I don't have 100 companies to work with. So the good news is, if my portfolio company's CEO wants to talk to me at 11:30 p.m., I'll do it, right? Otherwise, with 100 companies or more, it's not going to work, even though I might want to do that. It's not going to work that way. So back to filling the gap or the interest gap of investment. Usually, way before my portfolio goes out to start talking to investors about the next round, as an existing investor, I start socializing. I start promoting the idea. I start telling a group of my trusted friends in the venture community about this company. Right? There's no pressure, so that everybody gets comfortable and stay engaged, listening to me. And when we get to the point of kicking off the next round, usually I want to have already built a short list of potential investors, and then further help them and the company get to the finish line. So that pattern has been repeated a couple of times for my winners. At the same time, not all the companies work out. And I think that gets to a reputational matter that obviously, if a company does not deliver or make progress at the velocity that's more desirable, then I'm not going to over promote to the next round of investors. Because otherwise people will eventually realize I'm just like telling a bunch of BS, right? So far so good. And through my introduction, altogether, my portfolio companies have raised additional $600 million so far.
That's phenomenal. I'm curious to ask you about post-election vibe shift. And I'm curious to ask on the consumer side, but also venture. And on the venture piece, you and I were at an event a couple of months ago, not long after the election. You were on a panel. The topic of DEI came up. And I'm going to paraphrase here, but I'd say the four people on the panel ranged from having nuanced views about DEI, and I'm paraphrasing you, but nuanced to just outright 2 thumbs down, very negative. And what struck me as fascinating about that is that I couldn't imagine that discussion happening on a panel with VCs in Austin 2 years before. If you weren't 2 thumbs up, you would have been booed out of the room. You might have been blacklisted. People would be like, I can't believe that. I don't want to work with that guy. And it was just such a shocking change to me. And I'm curious for you, how do you see that happening within the context of venture, and maybe just zooming out, how you think about, political vibe shift within the consumer space?
Yeah. So I have thought a lot about it. There are a couple pieces here. First of all, about election. By the way, I am a very proud, naturalized American citizen, and I cannot say this enough. I came to the States in 1998 after finishing college in China. I've gone through my immigration journey, and then became a U.S. citizen. Have gone through several election cycles. Made my vote with a lot of pride. One thing I do want to say is it's still very much a privilege to be American. This is a relative term compared to many other countries where the system of democracy, political fairness is much, much worse, right? So by all means, even though we could complain a lot about what's going on here in America, but still, this is a far better country than many others. And that's my firm belief, no matter what. The second piece, when it comes to election process and outcome, again, having drawn my comparison and data points before coming to the States and being American, I'm still a firm believer in the value of agree to disagree. I'm very much against the notion that, because Joe, you are wrong, and that's how I am right, or because I'm right, you're so wrong. And because you're wrong, you are my enemy. And because you're my enemy, you have to be eliminated. I'm just very much against that kind of a thinking or a framework. Then when it comes to the result itself, obviously a lot of people are happy, a lot of people are not happy. But that's also where, when I held, personal conversation with my friends, regardless of who they voted for. I want to say, let's face it. You may not like the result, but have you truly understood why the other voters did not vote the way you like? And I think that's often a missing piece. Right? It's very convenient to accuse the other side of, ethical, moral, or kind of a wrongdoing. But the reality is, you cannot accuse the other half of the Americans just being criminal to rationalize the election outcome. I just think that's a very lazy excuse, right? In order to win the next election, let's stay calm, let's stay rational, let's figure out what's going on. Let's listen to the other voters. That's the direction I'll propose and promote. But when so after the election, I also shared a newsletter. It's also just about the startup world and VC investors, right? We have to listen, right? We also have to listen to our customers, right? You cannot tell yourself or the customer refuse to buy from you because they're dumb, they are criminals. And again, that doesn't help a startup or VC win a deal or make an investment take off. And then specifically on the notion of DEI, also to be clear here, I'm definitely an advocate for diversity, right? I'm Asian, and I think on the panel that evening with Austin Venture Association, I said, look, as Asian, at one point I was told by an LP group that, oh, you don't sit in our DEI program because you're Asian. I'm like, what, WTF? So when there is a good concept of diversity, when it comes to practice, I think that's where things don't necessarily go the way it's supposed to go. That's where a lot of friction and conflict started to emerge, right? But then finally, I would say if we look at the essence behind the concept of diversity, it goes way beyond a ethnicity or cultural kind of a mark itself. It's actually a valuable aspect of investing. And that goes back to early on during this conversation about seeking non-obviousness, right? As an investor, we should leverage our diverse kind of a mindset to identify opportunities early on and take action on it. And that's where potential alpha of the investment can be generated and captured. So, the abuse or misuse of some of these, DEI concept is certainly to be worked on. But I still believe in the virtue of seeing things different as a foundational element of investors and startup founders. So these are my 2 cents.
You're a concentrated investor, very concentrated.
Yes.
Was there an aha moment in your investing journey where you realized that concentrated investing was for you?
Yeah. So back during the early years of iFly, initially I thought I would carve out a small piece of the fund, write tiny little checks, among friends, former colleagues, as little as $50,000, right, and build this pool as a feeder. And that was an extension of how I sort of invested back then when I worked at my previous firms, Vantage Point, Formation 8, and so on. But at some point, I came to realize that concept would not work for me, because if my feeder companies are doing well, they should still go out to find the best fit to lead the next round. I don't necessarily should stop them from I should not stop them from doing that. And if I were not the ideal lead for the next round, I should step aside and help them find the right qualified lead. At the same time, if a company out of my feeder program doesn't work well, I'm not going to invest in the next round anyway. Right. So with that, I start thinking, what is the benefit of doing such a feeder program, small checks here and there? Let's say, a total of 30, 40 companies. It just would not work for me anymore as a solo GP with a limited fund size and time availability. So with that, after doing only 2 little tiny investment, I stopped doing that completely. And I switched to this conviction-driven, concentrate portfolio construction approach. And then along that journey, I have to admit, every once in a while, I do feel tempted. A friend says, now I'm happy to give you a carve out of $100,000 just because you are Han Shen. I'd love to include you. I really appreciate when my friends say that. But at the end of the day, I have to remind myself, as a GP, with a particular investment strategy that fits my style and fit my core strength, maintaining a certain degree of discipline is also important. And so long story short, over the past 8 years, I've stuck to this concentrate portfolio approach, and so far has worked really well for me and the fund.
How do you talk to LPs about the level of concentration, understanding that obviously you're trying to optimize for upside, but that over the life cycle of multiple funds, there's going to be a fair level of variance on performance with that? Like, what does that communication look like with them?
Yeah, so I definitely have to praise our LPs loudly on your podcast because they are experienced, they are sophisticated and thoughtful. Obviously, there's also a mutual fit, right? If the LPs have done their own analysis and come up with a view, what kind of investment model they would prefer, that's already a part of the mutual selection process, right? And at the same time, if there are LPs who are so eager to gain access into an SPV of OpenAI, or some other hot late stage deals, certainly I can introduce friends who specialize in finding such access, building such SPV for LPs, and there's no contradiction with my approach. And initially I have to say, initially it was hard, especially when we had no proof or evidence. But over time, I think more and more LPs or repeat LPs recognize, that's just how iFly operates, and we do have data to support this model really works and works really well.
What's a question you love to ask founders?
Lots of questions. But one thing I particularly care about is how they continue to learn. And in the venture or startup community, there's no shortage of people with incredible profile, past success, credentials, this and that. And then within iFly, I told my colleague that on our investment memo, you cannot just simply write, "Oh, the founder is XYZ MBA, former employee number like a 120 at such company," right? It doesn't do any good. We care a lot about not just their past success, track record, but also how they continue to learn, adapt, and lead their next company. I have my investment success and failure. And when it comes to the failed investment, I'm actually very proud to say, I never picked the wrong industry. I never picked the wrong sector. But the failure is universally caused by the moment when the founders can no longer grow or break their own managerial / leadership glass ceiling, right? What has worked in the past does not get the founder to the next level. And so that's why I'm very much into how the founders formulate his learning or her learning curve, continue to navigate through the uncertainty, bring in the right resource and make the right decision. Without that, it's also going to be very difficult for me to build that conviction.
You, and I alluded to this earlier when I talked about when we met, but you probably grinded as hard as anyone raising their first fund. Can you talk a little bit about what that experience was like, and maybe what advice you'd have for someone who's thinking of spinning out, starting a firm, or someone who's looking to, an operator who's thinking about starting a firm and venturing out on
No,
their own?
totally. Yeah. The whole experience of fundraising is something I can spend the entire hour talking about on a podcast, if you will. And I share with a lot of my friends who are thinking about starting the next fund or starting a new fund out of their current mothership is that there seem to be two kinds of new GPs to launch a new fund. The first bucket is people are just so good, right? Once they leave, or even before they leave their current mothership, they already lined up a bunch of LPs. And the second bucket of people is that people just start raising a new fund because they are naive. I think I belong to the second camp. If I knew how difficult it was to raise money for a fund, I might have thought twice before I step into that direction, right? But having said that, in my year one, 2016, getting turned down by LP one after another was really hard. Think this way, as VC, you're probably used to tell no to others. But now you're getting no one after another. It's something to swallow, but as an adult, I think I do have thick skin. So that kind of a no itself is not a showstopper for sure. But I still want to talk about the emotional roller coaster openly, because when you feel bad about getting a no, just feel bad. It's natural, right? Human genetics is designed to have all kinds of emotions. That just soak in. Let's just feel bad for a moment. But the bad feeling itself is not going to make the difference, right? So what I eventually started developing for my own kind of staying cool is it's all about mutual fit to begin with, right? Going back to what I said, GPLP fundraising or not, the mutual fit matters a lot. If it's not the right fit, which is very common, that's fine. I still respect a lot of these LPs who turn me down because they are experienced. They ask incredible questions that help me learn, right? There's still value out of conversation, even though the outcome is a no. And again, talk about the learning from these LPs. It also refreshing to me to think about a potential blind spot in my fund strategy that I might have missed, right? So the reality is, between the very first close and the final close of my fund one, I rewrote the entire fundraising pitch deck, because I realized what I wrote in my first kind of a major version before fund one's first close would fit better when I still used to work for a bigger established fund. But given limited resource and, more importantly, my own time bandwidth, I had to adapt the strategy for what I have. So that's why I rewrote the entire pitch deck and got to the final close in 2017. And the last piece I wanted to share about getting the no is, let me expand that a little bit. Whether it's getting the no from potential LPs or us as a VC giving a no to a founder. A long time ago, I abandoned the thinking. Actually, no, I did not abandon, but I did definitely came to a view that I should not treat such conversation as a transaction at all. The transaction mean, yes or no. That's the only thing, and you move on. But the reality is, most conversations can be treated as a process of building relationship, even when you get a no or when you have to turn somebody else down. And my favorite example is back in Palo Alto. I turned down the founder. I think it was 2014 or 15. I turned him down, but I'm pretty sure I did something right, because 4 or 5 years later, the same founder who I turned down came back to me this time, not to pitch again, but introduced me to a family office on the East Coast, as he heard I was about to raise my fund too. And that family office later became my LP, right? So the takeaway is, if I treated that founder poorly, unprofessionally, that introduction would never have happened, right? So that's why karma is something we build every single day, even when we have to, turn down others. We can't always guarantee or promise anything, but whenever we can, right, we try to do something to be helpful, and I do mean it. So again, fundraising is never fun, but it's still a journey or part of the journey that can help us learn and build more empathy and shape, how we could become a better and more effective investor.
I love that. What's a conventional view in venture that you think is BS?
I don't know if I'll get into trouble or get ghosted by my friends if I answer this question. But I'll break it down to two buckets. One is about investment strategy. The other part is about relationship management. When it comes to strategy, I tend not to think, what is good or bad, what is right or wrong, or even use the word BS. Again, it goes back to what I mentioned early on. It's about fit, right? If someone thinks investing in 100 startups a year works well, and that's the right fit for, the GP structure, fund size, and even personality, then just go for it and build your evidence to support that. But in my case, I know, at my current age or stage of life, I'm unable to go hustle at every single South by party. Right? I have to face that reality. So when other people are capable of going or being everywhere, let me stay more disciplined, focused, and paced. I think that eventually boils down to part of the fit question. So that's why I tend not to say, oh, that strategy is BS, it's not going to work. Maybe it works well for others, just not for me. But the second bucket of relationship management, I do feel there's a lot of BS when people say certain things when they don't mean it. And there's one guy, again, I'm running into the trouble of potentially getting blacklisted. But just say this one guy, I've known him for so many years. Every time when he sees you, he says, "Oh, let's catch up." And I send a message, "Hey, here's my calendar. Let's book a meeting." Nothing, right? When this happens 3-4 times, you're like, okay, come on. It's not that I'm coming to you to do any ass kissing. It's just a genuine, for my side, it's a genuine way of, building relationship, stay in touch, stay friendly. When you don't mean something, don't say it. Right. And that kind of a thing, obviously doesn't bother me much because we have so many more important things to remember. But as a VC, whether it's a GP to the LP or as a VC to a startup founder, people do have memory, right? I have also heard things circle around my friends in the community about certain investors' behavior. We have to be really careful about our reputation. It doesn't mean, we'll have to please people for the wrong cause. But again, saying no to people can be done in a very professional and a meaningful way. So that's the second part of the BS question.
Well, I don't think any of that will get you blacklisted. If any of that rubs someone the wrong way, then I think they have thin skin. Well, look, Han, this was awesome conversation. If there is anyone out there listening, particularly founder, who would love to connect with you or iFly, what's the best way for them to get into your machinery for getting in touch?
My email is han@iFly.vc, HAN at iFly.vc. I welcome people to cold call me or use mutual friends, warm introduction. I'm okay either way. If it's cold call, my recommendation is like not coming to me or going to anybody say, oh, let's just grab coffee. The honest thought here is I can afford to buy myself a coffee. So when I reach out to people through a cold call, if I cannot find a warm introduction, I actually want to say something in my email that, based on my homework, that can relate to the recipient of my cold call email, so that I want to increase the chance of getting that meeting, whether it's a startup or LP or another GP. So now that you asked me, I want to just lay this as a general recommendation. You don't have to do this when it comes to me, but I think it probably works better when you implement that when people outreach to others.
Awesome. Well, Han, let's get coffee sometime.
My treat. How's that? Thank you for hosting me on the podcast. So that coffee is definitely on me then.
Well, thank you for coming on. I look forward to going to your summit soon, which would be great.
Yeah, that's exciting.
Really looking forward to it. Should be fun.
See you on May 7th, if not sooner.
All right. Thank you, sir.
Awesome. Thank you.
Hi, Joe again. Thanks for watching the show. If you'd like more of this in the future, subscribe to our channel. If you'd like to learn more about Seaplane Ventures, just check out seaplaneventures.com. Cheers.